Afternoon all, how are we doing? Sorry, bear with me 1 second. Just some stuff. There we go. Yeah, afternoon. How is everybody? All good? So, afternoon, Neo, John, Liberator, David, Virginia, Kennelly, Fletch, Brian, and AZ. How are you doing? Just a quickie on news. Just to recap, there's no news today. We've had everything. So there's not much movement expected based off of news this afternoon. So it should just be an up and downy type day. This morning's news, not a great deal. We had APEC data show a 3 million barrel shortfall as the Saudis extended their cuts. So, of course, the oil price had a little bit of a spike. I spoke this morning about oil and the fact that I was waiting for it to come back down, either do a pullback or come back down towards this range low ahead of tomorrow's barrel counts. And obviously what they've done is they've released news before the barrel counts. So it's off. So off to that $95 a barrel target now. And I suspect it will carry on going that way. So that's already broken out the highs oil. Nothing much we can do about that. Apart from that, no other news this morning. Bit of talking head news, but yeah, nothing exciting. Nothing exciting on the news front. This morning's ORB was very easy. So the pre-market range, whichever one you took pre-market, straight in, straight out, profit. It pulled back a little bit and then it's gone a little bit lower. We're down to a 5R now on our way to ADR, just about to hit ADR on the DAX. But that was a nice, easy, quick $2,000 this morning. The DAX basically is just coming down to a support level. There we go, updated. So we're just coming down to this level here, which we've tapped into a number of times and bounced out of. And we're just coming down to retest this level. So this is quite a key level previously, which is 2 week ago's low, I think it was. Yeah, it's a 2 week ago low, which is this level here. So this is where it took off that week, basically. We pulled back down and they bought the crap out of it for 3 days, 4 days. We came back down. This was obviously a propulsion gap from here. We came back down, tested it multiple times, wouldn't allow it through. Then they tried to crack it, weren't allowed through. So we're retesting that potentially. So this is ADR, and then that is the next level. So if it breaks to the downside, the DAX might be a good little buy spot. Nothing's moved on FX. We've had a busy day on the US dollar. I say a busy day. We've had a big candle movement off of oil. There. That's it. So we're going nowhere. Absolutely nowhere today on the US dollar CAD. US dollar Swiss is having a little bit of a push because we've got a little bit of euro weakness, little bit of yen weakness coming back. Excuse me. To do that gap fill. Sorry. Pound US dollar. We had a big drop on the pound this morning. Since then, we've put in 5 hours completely sideways. Total whipsaw sideways action. So, real bag of nothing today. We've had one big move and that's it. So, nothing exciting. Afternoon, Peter. Jiao. Amy. Jimmy. Baggy. Mac. Does anyone know if mean reversion works on gold? Try it. I don't trade gold, but mean reversion works on everything. Yeah, everything, literally every instrument, tradable, crypto, FX, indices, options, derivatives. everything, literally. If it goes down, it goes back up again. That is a mean reversion. Profit take move by whoever's sold or bought it. Afternoon, Mr. Lunacy. Whether it's consistently profitable or not, you'd need to back test it and forward test it. But I don't trade gold because it can be very erratic. It's just another US dollar cross at the end of the day, gold, but it's more erratic because people do buy gold on its own. So, but there's no currency strength. There's no fundamentals around gold. It's just something that occasionally will just get bought up. So it hasn't got the reliability of any other US dollar cross, which is why I don't trade it. But it's tradable. Who's taking the 15-minute pre on the NAS today? I don't know. We'll see what it's like. Morning, Hamza. So yeah, so no movement on anything. Haven't managed to bank anything today. Just been flip-flopping around, really. We're not going to do anything till tomorrow afternoon. We're waiting for the CPI figures tomorrow afternoon. So it'll be crap till then. Excuse me. Oh, I've been programming all morning. My eyeballs. So I get really tired when I program, like intense programming, like 3 or 4 hours, full concentration logic and stuff. Fries your brain. So excuse me if I yawn a lot this afternoon. So this afternoon, we'll have a look at what the indices have got for the US for us. We've got 2 minutes to the open. I don't think we've got any gaps anywhere. Nope. So, yeah. Don't know. We'll wait and see what happens with these. We've had a little bit of movement today. Not a lot. We're still well within ADRs on everything. So I'm not expecting necessarily huge movement today based on what we've seen from the US dollar. I expect probably a little bit of rotation today. But we'll see what happens at the open. So we've had this really annoying big sell-off before the open. So your pre-market 15 today is going to be this low. And wherever the high of this current 5-minute pre-market candle is. So those are going to be your pre-market 15 ranges. So they're all okay. Just about, yeah, I mean, they're all okay. It seems very, very heavy, this market, pre-market. So look at that, the Dow. Not taking that. So yeah, won't be taking the Dow, I don't think. That looks a bit too big. Yeah, oh no, that's within parameters, so we'll take a break on that. But we'll see where we go. Whoa. That went fast. Not sure why that hasn't triggered. So the NASDAQ is below the range. The Dow was within parameters, but didn't trigger a trade for some reason. Just have a quick look at that. I'm not quite sure what happened on the Dow there. That movement on the Dow, the EA just went. Sorry, I don't know what that is, because that moved so unbelievably quick up to there. Literally, as that candle closed, we were up there somewhere. So that really foxed the EA. Couldn't get a trade on. Not that I want one on that thing because it's a lunatic this afternoon. So. Interestingly enough, see, this is really weird, right? This is I've been talking for the last couple of days about the difference between an ECN account and a prime account with Robo Forex. This is a prime account at Robo Forex. Okay, the EA managed to get that long on the Dow. It hasn't managed to get it on the ECN. It couldn't even fire the pending orders long and short. Look, couldn't do the calculations. This one, it could. execution time on the prime accounts is so much better. So I'm long S&P and long Dow on my other account, but not triggered on this one. Not trading the NASDAQ pre-market, too tight. Difference between, see, this is hopefully this is really good. Gives you a really good understanding of the difference between back testing and forward testing and trading live. What you see in a back test, that would have triggered because it would go candle close, execute everything. Let's pop all these in place and go. Start the next candle. That isn't reality. That isn't what you get in the real world, as you can see. You get totally different executions with the same broker on different accounts. Obviously, with volatile strategies like this, that's basically the way it goes. So why have I only got one trade on the S&P? Not enough leverage. %3% is too high. Can't trade 3%. Down. Right. So Dow break is up. NASDAQ's whipsaw. S&P is a long. See where we go. Peter, ADR strategy with set file from Telegram is working beautifully. Cool. Yeah, that probably is, to be honest, at the moment, the ADR set file is probably the most profitable thing this month because we've had very little, wrong VPS, very little, must be that one. Very little movement on the ADR, on the RSIs. So haven't managed to get much on a RSI at the moment. Wait for that to load up. Take a while. We'll have a look at those in a minute. So approaching 2R on the S&P. The Dow, I mean, you wouldn't have got on that. If you did manage to get on it, fantastic. 5-minute opening range, too big to trade on the Dow. On the NASDAQ, oh, it's just too big as well, look. Just over 20%. Rules is rules. Not trading it. So just on the S&P, and I have actually got the Dow Jones on my other account. 2R target hit. I'm just going to close that out. I'm not sure why that's a little bit too high as well. Just going to close the first position and trail the second on the S&P. That's all I'm going to get today. A load of rubbish. There. Out in profit. I've got the Dow Jones running over there as well. I'm just going to let that one run. Not hit 2R yet. Weird afternoon. Mr. You are making me sleepy. Sorry about that. Now I've said the word sleepy. Makes me want to yawn. Afternoon, Daniel. Gone live this week on the M5 hedge scalp. Everything ranging. Not had one trade yet. Yeah. Yeah, so we were going to look at the VPS, weren't we? Flat. What is flat? H4. Look at that. H4 M15 or H4 M5, which is his running. Look, flat. Bank 2.3% so far this month. No trades on. We haven't had any H4 RSI extensions, have we? So yeah, totally flat on that. You see that? Yeah, totally flat on the H4 M5 strategy. Hedging. Banked 15% so far this month, sitting in 14% drawdown. This is always sitting in 10 to 20% drawdown. That's what it lives at because it's a hedging strategy. So it's always got drawdown on, regardless of whether it's doing well or bad. So 15% banked on that. That's on target for a hell of a month. That's on target for a 45% month. Keep an eye on that one this month. This is H1 mean reversion. That's my account. It's not going anywhere at the minute. ADR reversals. Geez. Who's trading these? Peter. Good job. 14% banked this month. We've banked 5.6% on it this week, sitting in 2.11% of drawdown. Fantastic result on the ADR reversion. Basically, because what we've had, if I bring up the dashboards, what we've had this week, or rather over this last few weeks, what we've had is very, I was just showing you the H4 strategy is flat. We haven't had any H4 RSI extensions into any decent level for ages, have we? For weeks, because the market's been sideways. The H1s, we've hardly had any trigger. That's why I've only got 4 or 5 positions on at the moment, because we're just not getting those extensions. The market isn't moving. It's moving up and down, but it's not moving with any force or direction. So what we're seeing is on the ADR dashboard, which we'll have a look at in a second, we just had 2 ADRs triggered, is we're getting a lot of ADRs hit, and all it's doing is it's popping up to ADR and pulling back, popping down to ADR, pushing up. Range bound. ADR mean reversion works absolutely fantastically in a range bound state, doesn't it? Because all we're doing is we're pushing hard outside of our normal daily ranges, and we're pulling back into them. So yeah, I'm not surprised that's banked. So yeah, 14% though. We're only on the 12th of the month. Again, that's on target for a 30% month plus. So hedging and ADR reversals going to bank possibly 40-50% this month. Very nice indeed. So talking about those, let's just quickly look at what the indices are up to. TP hit on the S&P 500. Letting the runner go, see where we get to with that. Banked 800. So that's 2.5 grand on the day so far. Would have had a nice profit on that as well. Not quite hit 2R though on the pre-market range, but really interesting that other account triggered that and this one didn't. Difference of broker makes, eh? NASDAQ, if you have taken the 5-minute ORB on the NAS, that was really tight today. 398 is 393 is the maximum range, which is 20% of ADR. 398 is what we got. So if you're not paying attention to ADR, which if you're using the opening range breakout EA, you won't be, you will have taken the 5-minute ORB and you'll be long on that now. So you will be in long on the NASDAQ. Yeah, interesting. Is there a problems with stop level? Don't know. Ian made 8R on the DAX this morning. Good man. 8R? How'd you get 8R? Oh, if you took the 15-minute pre-market, you would have done 8R, possibly. Probably, yeah. So the 15-minute pre-market was there today. So yeah, that's 6R. 7R. Just about 8R you got out of that. Yeah, nice. Beautiful break today. If you held, I mean, well done for holding it. I wouldn't have held it that long. I'd have been out as soon as I saw some bullish price action, but good hold. We're just shy of ADR, depending on how you're taking your measurement. You've either just tapped into ADR or just shy of it on the DAX. So good move today. Very good. Afternoon, Daniel. Did you take the DOW today? Yeah, not on this account. On that account, I did. Talk to the broker. What's the acceptable pre-market range to trade the ORB? Trade anything you want. Up to you, pre-market. With the opening range breakout EA, the only option you have on the ORB EA is to trade it or not to trade it. You can set the minimum and maximum opening range here manually. So my research has led me to the conclusion that somewhere between a 10 to a 20% is a decent range. Anything over a 20% of ADR as the pre-market range, or range on the 5-minute break as well. Anything more than 20% of ADR makes it hard for you to get and achieve a profit target on it, basically. So if you think about ADR, if you look at the way ADR works, yeah, it's the average daily range, obviously. If you've got, if you're sitting somewhere around here and you want to take a trade with a stop loss range breakout with an entry and a stop loss above the range, to get a 2R, yeah, you're going to need it to move down to somewhere around there. Yeah. So if that range is over 20% of what this does in a day, to achieve your target at 2R, you'd have to go beyond the average daily range of the instrument. Yeah. Which we know 58% of the time it doesn't do. So if you're taking an opening range break at the open, which is more than 20% of the average daily range, the odds of you hitting it are less than 40%. Yeah. So that's why it's good to keep the ranges small. And if it puts in like a 35% of its average daily range pre-market, don't take it. Wait for that 5-minute candle. And if that 5-minute candle is below 20%, take that one instead. Yeah. So with the ORBEA, you can't really do this calculation automatically. You need to know what ADR is, which if you've got the ADR indicator, that paints it on there. If you've got the ADR dashboard, that one, it gives you the ADRs. So you just have to put it in manually, basically, into the settings, and then tell it to take the 5-minute, the 15-minute pre-market. Then tell it to take the 5-minute ORB, and then if you want to, tell it to take the 15-minute ORB or a different ORB later, and it will take whichever one falls within those parameters that you set in here. But the EA that I'm building and testing with at the moment does all these calculations, automatically. So it decides whether or not it should be taking trades, which is why it hasn't traded here today, because the NASDAQ, and again, you know, this is 398 on a 393. If I was trading manually, I'd go, yeah, that's all right. But it's an EA. It's a blunt instrument. It has to work within parameters. I said 393. It was 398. That is ever so slightly over, so it doesn't bother. Whereas I wouldn't have a problem taking that in real life. But EAs do as they're told. They're stupid. But that's not an acceptable level. That's just what my research has led me to believe is the most profitable, or the most easily achievable, basically. I've just lost track of where I am on the chat. There we go. Peter, 15% on ADR and 22% on hedge profit, mean reversion. Flat as you are. Good. Started about 3 weeks ago. Good job. Of trading related, what kind of programming are you currently working on? This, basically, the hedging strategy for the indices. I've just finished today a new version of it. I'll go through that in a second. Let me just quickly whiz through these ADRs, because we've got some ADRs hitting, and then I'll go through those. So oil's just hit ADR. We've just had news on this, so I'll be a bit careful me reverting this one today. If you do want to take it, drop down M5, wait for a reversal alert. But by the time you get that, because this is a big, strong move, it's probably half over, so I'd skip oil. Euro CAD. This Canadian dollar seems to be powering up a little bit. Yeah, nicely. Yeah, really strong Canadian dollar. Oil's rallying. Yeah, I keep saying in here, don't I? The relationship between oil and the Canadian dollar is very strong because its main export is oil. Therefore, if the price for oil goes up, Canadian dollar strengthens. So CAD is having a big run off the oil news. So pound CAD and euro CAD and oil, same thing. They're all moving because of the same thing. We've got a restriction in oil supply, which means that as the demand stays the same, the price has to increase. So just be careful trying to mean revert these today. You could see some big ADR moves on these. But if you do want to, wait for a reversal alert. But I think you'll find by the time you get a reversal alert today, with all of these, you'll have found that the move will be half over. So not really worth taking. If we get an accumulation form somewhere and you get a reversal alert, probably okay, because it means that move's possibly over. But if we just get a push, a pull, and then a continuation push, your reversal alerts are probably going to be fairly far away. So these might be tricky to get into today. Euro Swiss is the only one that's not related to those. That one's already played out. You've missed it. So we've had the hit down to 125 ADR. There's your reversal alert, which went in. Yeah, so straight down, pushed up, 125 ADR, reversal alert kicked in, off we go. There's your retest. So that is your, you can just about see that, can't you? There's your W pattern reversal. And you've had out of that so far 13 pips. 17 is half an ADR. So half an ADR is a good target to take on an ADR reversal. So you're pretty much there. 17 pips is there. So that would be your target back in that accumulation. So there's your ADRs. RSIs, we've got 3 RSIs. Same thing, pound CAD. So just be careful with this one. Pound CAD, that's just gone over the 30 level, not quite extended on the down below 25, which is where I would start to get interested in it. 4 hour extended down to 25, so that's a decent extension on that one. So we will get a profit take move off of this at some point, but just be a little careful at the moment because it's coming down so fast and so hard. It does look like it's pulling back a little bit now though. So but what I would expect to see is that sort of move. So continuation on it. And pound odd is the only other thing we've got on the 4 hour RSI extension to the downside. It's just literally touched it, ticked it and gone. There's a monthly support bounce. So there's your 2 month ago high. Tapped into it, accumulated it, used it as support. This is the second test of support. Down in the 24.72 zone. We are long. It's trending upwards. Good level to buy. Yeah, 24.72 zone is where we tend to pull back to in strong trends. So we push up, pull back into that 24. If it fails, you pull back into the 72, 24, 72, 24, 24, coming down into the 72. Yeah, strong trend continuation. Extended just about. Not great. Where are we? So just pulling back. Got a trailing stop on this S&P, which is going to bank me about $1,000 if it stops out, which it looks like it's going to. It's not particularly exciting, this move, is it? We managed to get just about get a 2R on the pre-market range, and now it's trailing a little. We'll see. Might still have some legs in it. Propulsion gap is holding on the S&P. If you've taken the NAS 5-minute ORB, you are long, obviously, still. So yeah, so what I've been working on this morning is just a revision of this. So let me flick forward to something like these. So basically, loads of new inputs in here. Main ones are trailing stop additions, which I wanted to test. But the main thing is the hedge recovery system. So I've got a hedge recovery system in here now. And basically what this does is there's 3 types of hedge exit that I want to test, basically. So the first one is what I call a conservative exit. So let me just, if I leave all of those on, let me turn these off to start off with, and then I'll show you what I mean. So the first thing I'm testing is what I call a conservative hedge exit. So when you get hedged, you need to try and get out of the hedge. So there's multiple ways you can do this. So let's see if this one hedges. So that's gone long, that's gone short. Right, so this is hedged. So basically, when a hedge occurs, rather than targeting the 2R, which was where the previous take profits are, what the EA does is it extends those take profits, okay, to a higher level. So in this case, 4R. So that is still well within the average daily range of the instrument. So it's achievable. Yeah, ADR is up here and down there. Yeah, so we can still get to these quite easily. That's within 58% movement. So no, within our 58% probabilities. Yeah, of staying within ADR. But it's a nice big move. So what we're looking for is this to get far enough we can get out with a really nice profit, but at the same time be getting close to the point where we should be getting exhaustion coming in. So if it starts a move, we get there and then we try and exit. So what the conservative exit does is when you get down to your target and hit it, we wait for the market to pull back by an amount that takes us into a net profit. Yeah. And I call this a loss recovery target. So within the EA, what I can do is I can specify a loss recovery target, basically. So if we hit this TP, either there or there, it will then calculate a loss recovery target, which I can set as a percentage of what I've just made. So let's say, for example, it goes up to here and I make 4K. I will say, okay, I've made 4K on my longs. So what I want you to do is, if this pulls back now and it gets me to around about 20% of that figure, close out the shorts and just bank the difference. Yeah, so we'll see if we can do it on this. I don't know if it's going to do it on this one. Let's see what happens. That's going nowhere, is it? So that's basically what I call a rotation day. We ain't going anywhere. Yeah, we haven't even managed to get 1R either way. This is a lost day. Nothing you can do about it. It's a lost day. Yeah, so you're going to lose. Nothing you can do. Oh, there we go. Oh, right. Okay, we did win. We won $2,000. So basically what it did was it banked however much that was. I didn't miss it. It went too quick. It banked $8,000 on the longs. Yeah. And then I said, basically, wait until you can make me $2,000. So I've banked 8K. What I'm looking for you to make is 20% of that, $2,000. Yeah, so if you can pull it back, right, so that drawdown is $6,000 in drawdown. The difference between the $8,000 profit and the $6,000 is $2,000. Close that out. Bank for me, please. Yeah. So what it's doing is it's waiting for that move, that exhaustion move, when we get the profit take. Yeah. In this case, looks like it was news, but same principle applies. So that's what I call a conservative exit. Yeah. So that's one way of getting out of your hedges. So don't forget, the idea of the hedge is not to make a load of money. If we get the opening range work, job done. Yeah. So the S&P today, it hit my 2R. I'm out. I'm done. I've made 800 quid. The DAX this morning shot off. Yeah. So these days like this, where it breaks clean, you just bank it. So I banked 1,800 there. I've banked 800 on the S&P. I haven't got to worry about it. It's just making money. We don't care. What we've got to deal with is if we get into trouble with a hedge. Yeah. So we need to work out ways of getting out of them. So this conservative exit, that's what that one does. So this one basically is sitting in drawdown at the moment. Let's just see if we can get this one hedged as well. I was trying to pick a time. There's believe it or not, when you're developing strategies and you've got ideas that you want to test, it's very hard to actually get the EA to do it wrong, because what I'm trying to test here is hedging. I was going through loads of different times where it was just going money, money, and it was making money day after day, and I couldn't get the bloody thing hedged, so I couldn't actually test anything going wrong. But so I found a time period in January this year where it did go wrong a few times. This is why I wanted to find this period of time. So there's another hedge. So again, we move our targets out. Now, again, you could pick whatever you want. 2R, 3R, 4R, 5R. Anything above 5R is not going to work, because then you're getting extended beyond your average daily range. So the max you can ever trade with this is 5R, because we're using 20% of that range. Yeah. So see if we can get that one up to target, or if it's just going to rotate. Okay, so that was a rotation day. So it just exits the end of day with a loss. Nothing we can do. So next one, there's another hedge. Right, so we've hit a 4R target there, yeah? So we've banked 8 grand. We are now sitting in 12 grand of drawdown. So our net P&L is sitting at $4,300 in loss. So what you can see it's trying to do is get us back to a 2 grand target. So we've got to pull back a little bit on this move. So we're looking for a push, a pull, and then it can carry on its merry way if it wants to. But when it profit takes, we will do the same as the banks. We will take the profit at the same time. So let's see if we get this one. Further push down. And this, right, so the reason I'm testing this one is because I wanted to test what happens when we get to ADR as well, which I'll show you in a minute. Okay, so this one, we're sitting in 3 grand of loss, which is what we've taken. So that one took around about a 3 grand loss because we couldn't get out of the hedge, basically. If we'd have set our target to 5R, we would have had an exit out of the hedge. Right? So the other thing that I'm testing is what I call a aggressive hedge exit. And again, this is a good time to test it, this one that we're on at the moment. So what this one does, instead of just waiting for that move to come back, when we exit our position, it takes additional positions. So dollar cost averaging, position trading, basically. Yeah. So what this one will do is when we get to that level, which this is a news one, isn't it? Was this the news one? Yeah. So you can see what it's done is it's exited that position and it's put a sell stop at the low of the previously closed candle. Right. So in this case, because it's news, it's never going to trigger that, is it? Right. But what this will do is when this candle closes, it will place a pending order. There we go. So there's pending sell stops gone in now at the low of that candle. Yeah. So what I'm saying is when I hit my target, what I want you to do now is if we make a new lower low, I want you to get me into a second entry, bring my average up so that I've got a chance of getting out of this trade. Yeah. Dollar cost averaging. Same as we do with position trading. There we go. So that was an entry there. Quick exit there. CAD Swiss has an H1 RSI extension. We banked 1900 or just banked 2 grand. Yeah. So let's see how it would have done on the other one where we got hedged, which is here. Yeah. So targets moved. This was the one that was rotation day, wasn't it? We couldn't get out of. Markets aren't going anywhere, by the way, while I'm waffling. Right. So this one was the hedge, I think, wasn't it? That hit ADR. There we go. So we hit ADR. No, we haven't hit ADR, sorry. We've just exited our position there. And as you can see, it's put pending orders in. And every time the market pushes away from us, we cancel that pending, we add another pending. So if we're making new lower lows and lower highs, market structures going down, we just keep trailing our pending orders with price until the buyers take control. Then we get back in with another order here. So you can see here we were trailing down. Then we got a bearish engulfing, or rather an outside bar. So we triggered a new order to go long with dollar cost averaged into the position. Yeah. So that would actually now give us a break even, but I'm not asking for a break even. I'm asking for a couple of $1,000s in profit. I'm not asking for me to get out of it totally. I just want to make a little bit of money out of it today. So we'll wait for that price to push down. Going to get back up. I can't remember if this one works or not. There we go. So you can see now we're only in $2,000 of loss. we're going to close out roughly the same as we did before. So that brings me on to the third option for exiting, which is the aggressive ADR exit. So exactly the same. I can't remember what day it was. 19th, wasn't it? So it's exactly the same strategy. Just let the first one play out. Okay. And the second one was the loss. This is your fault, Brian, or David, rather. You asked me what I was programming. So this is why we're putting everybody through this torture. Right, so there's your second entry going in, which is the aggressive hedge exit. Yeah, that's triggered. Hasn't worked yet. So now we've pushed down below ADR. So as you can see, what it's done now is it repeats the same process. If we're pushing down and we've gone beyond ADR, see this line here is turned solid, not dotted anymore, because we've hit ADR. So if we hit ADR, basically, we say, right, get me into another entry. So this is an aggressive move. We know that 58% of the time the market spends within ADR. And we know that when we hit ADR, a lot of the time it will do a pullback from ADR because it's exhausted and needs to take profit. So this is taking advantage of that in the fact that we are now going to scale in harder at this level. So this is dangerous if you get a very strong 150, 200 ADR day. This is going to be painful. So I need to play with figures and optimize this. I haven't even tested this yet. So I just want to get the logic in place. But as you can see, when you take another position at ADR, when it pushes up, didn't quite make it, this one actually. I think this is the one. Yeah, there you go. Yeah, exited with $2,000 in profit. So what it does is it gets you out of the position. We know that when we hit ADR, we put an ADR move in. You could set this to 125 ADR, but whatever you want. But that gets us out of those positions with DCA. So the idea is if the hedge is gone wrong and we can make a big amount of money on the hedge, there's multiple ways you can get out of hedges. So this is all going to be fully tested, all these different exit scenarios. But that's basically what I've been working on today. So it's getting closer to a full, complete strategy. But the way that I'm going to use this, okay, and this is obviously discretionary, is, for example, today, I'm looking at this S&P now, right? And let's say, for example, I'd got hedged on this. I would have a TPs in place, which I have up here at 5R, yeah? Now, you see where this TP is. The TP has been placed at 5R because that's what the EA has been designed to do. But that is above yesterday's high. So when I'm looking at charts and when we look at the charts and we do the analysis, we're saying, right, where are we looking at for upside potential and downside potential today? So if I get the EA to take me into a trade and it hedges into a trade, I will be able to automatically adjust my take profits to a level where I think we're more likely to get a bounce. So as standard, I've got my version of this EA set up to enter at 2R and 5R. So you see it's got the 2R target. It's now pulling back and I'm looking for that runner to close out at 5R. If it had got hedged, it would have moved those all the way up to 5R. However, today, I would look at that and go, don't be stupid. It's not likely we're going to hit 5R. It's more likely we're going to bounce off this high. So I would just move the TPs down. And what it would do is when it gets to there, it would then automatically trigger the second lot of shorts. So again, I can test all scenarios as much as I like. But at the end of the day, I'm a trader. So I'm going to be making decisions based on what I see on the charts. If today it was hedged and it had set the TP down here at 5R, I would say that's fine, happy with that. However, if the 5R, for example, was down at this level, yeah, I would look at it and go, nope, that's a stupid thing to do. You should have your TP here, which might only be 4R, for example. So you can adjust it and it will automatically handle that rescaling back in for you. Yeah, so that's what I'm looking for it to do. That's how I want to use it. So it's as intelligent as it can be in the fact that there's certain things we should do and shouldn't do when we hedge, and there's certain ways we can or can't get out of hedges. But we need to look at levels and be realistic. If something's set at 5R and it's like 10% beyond yesterday's high, which was the previous day's high, and that is also a level from last week, which was a high, i.e. we've hit it 3 times and bounced, ridiculous to put your TP above it. You put it below it. So if we're hedged, we need to get out of it from that level. Yeah. So that's what I've been working on. There are ways I could automate all of that stuff as well, but I can't be bothered because it's too complicated. And at the end of the day, I don't think it can make decisions better than I can. So, but virtually, most of the time, as we know, as you see in here, we get a clean break on a good 1 or 2 instruments a day. So if we can get a clean break of 2R on 1 or 2 instruments a day, if both of these were to hedge, we still make profit on the day. Yeah. So it's all about managing all of the instruments as one portfolio, basically, with the opening range strategies, because some of them are going to work, some of them aren't. What we're looking to do is try and minimize the losses on the ones that don't work. So there you go. That's what I've been doing today. Probably going to take me about 6 hours to catch up on chat now because I've been waffling. But anyway, ADR. Did I see another ADR come in? It was an RSI, wasn't it? Sorry. CAD Swiss RSI on the hourly. So just missed ADR, look. By Nat Swisker. So CAD Swiss pushed up. Obviously, Canadian dollar very, very strong at the moment. My US dollar CAD's gone into profit, hasn't it? Not quite. Ever so slightly missed it. So I might bank some of this. So bear in mind, tomorrow we have got CPI for the US dollar coming out. So we've got some US dollar movement tomorrow, positive or negative. We don't know what it's going to be. So I'm sitting here at the moment looking at this thinking I can bank $500. And ideally what I'm looking for is a push back down into these lows, which is 125 ADR. So I'm going to keep an eye on this CAD Swiss. If we can get a continuation move on this Canadian dollar, I will probably take the whole lot off down here today and bank whatever the profit is on it. Just to minimize my exposure on the US dollar, because obviously we've got US dollar moves coming in tomorrow. So I'm just going to keep a close eye on this one. If this ends up somewhere around here at close, I will close out the profit that I have, just in case we pull back into propulsion ahead of tomorrow's news. Yeah, so just don't want to let the profit completely vanish, basically. I'd rather bank something. So going to give it the benefit of the doubt that this Canadian dollar move is going to continue on the oil move. We'll see what happens. Right, let me catch up on the chat. Peter, are you using H1 hedge? Is your ORB EA the pre-15 or the pre-5? My ORB is the pre-15. So 9:45 to 10, or for the US, 4:15 to 4:30. So it's the 15-minute pre-market. The 5-minute pre-market you can trade as well. A lot of the time, if you look at the Dow today, yeah, today's a prime example. Look. So there is your, there is your pre-market 5. There is your pre-market 15. Yeah, so 5, 10, 15, and that's the 5. A lot of the time, you will find that the 5 is very, very similar to the 15. And a lot of the time, you'll find that the 10 minutes before that 5 are actually inside bars, and that is actually the 15-minute range anyway. So there's no right or wrong. All we're doing is we're saying to the market, gives a couple of levels, and I'll see if we can get a move out of it. The move either happens or it doesn't happen. Whether it's the 5, the 15, the 25, the 30, or what, it's a breakout. There's no way of knowing which is the best to take. Doesn't matter, one or the other. One or the other, both. Anything you like. That's the beauty of the opening range breakout EA. You can set 3 different breaks. Yeah, 3 different ranges to trade. So if you want to take the pre-market 5 and the pre-market 15, and the 5-minute opening range, the cash balance, you can trade all three of those with 3 entries. Just tweakable as you see fit. Marco, I've already done oil. Just broken out to the upside on the news. I'm so tempted to jump in on that H1 hedging set file, but I'm scared. Don't blame you. It's a very scary set file. I think if you're going to trade the H1 hedging set file for the market reversal alerts EA, you have to basically say, I am happy to lose 30% of my account. Yeah, because what's going to happen is it's going to gradually get itself into positions up to 30% drawdown. And it's going to stay somewhere between 10 to 30% flip-flopping all the time. It has got up higher than that as well. It's got up to 45-ish%. When we had, it was July, I think it was. We had some aggressive moves before we went into the summer trading for August. We got up to something around about 45% drawdown. It banked 32% or something that month. Yeah, but the drawdown obviously went back to, not, as you can see, it went back to, it's at 14% now. So but it's always somewhere around there. So what you've got to do is whatever money you put in there, you've got to write off 30% of it, because at some point you're going to need to want to close the whole thing out, and you will need to take a loss on that drawdown. It will get itself out of that drawdown at points. So if you get a really strong move in the market and it just so happens to only get in that direction, it will close everything out, but it's not usual. But you can see the amount of money it banks. It banks a lot. I can't, I'm not sure how much it's banked in the last quarter. We'll have a quick look. But it banks a lot. But that's what you would expect, because it's always right, isn't it? It's hedging. It's always right, always, because it trades in both directions. So if it's not right, it's wrong. And it banks the right, and it waits for the wrong to be right. It's just right all the time. That's the beauty of hedging. But as you can see, some of these drawdowns can get not that massive, but I mean, you'll easily be in 5% drawdown on individual instruments at times. Oh my God, this VPS is so slow. We're just rallying again on the DOW or trying to rally on the DOW. All the indices actually are trying to rally. So I'm just, I've just been stopped out for a tiny loss on my DOWs. I'm just putting the trades back on. So last quarter, load. It's banked 34k. That's going back to 25th of July, August. That's not the last quarter. Where's the history gone? I've only got trades in the history going back to July, beginning of July, August, 2 months. So 2 months, it's banked 34k. Can't really see that, can you? Yeah, so probably can't even just see that. It's 34k. And it's done 15 of that this month. So 15 to 25% is pretty normal for that hedging set file. DD's dropping a little bit as well. But ADR's the hero this month. Look at that. Having a brilliant time, isn't it? Yeah, ADR reversals going back to July, start of August for some reason. Where's all the data gone? Anyway, so that's banked 26%. I see that either, can you? 26% on the ADR reversals. So ADR reversals and hedging, but ADR reversals are a lot safer. We just had an ADR go in there. Look. Is that CAD Swiss? Yeah, CAD Swiss just tapped into ADR. Literally exactly tapped into ADR. Look. So potentially you got M pattern reversal going in there. That's your reversal of that. Lee, sometimes my ORB does not open range 2 pending orders. Depends if you've got it set to do that. So if your range 2 pending orders are the same, you have to have this input down here, which is take multiple trades at the same level. Yeah, that has to be set to true. So if you've got range breakout 1 and range breakout 2 both set to true, and the high of the 15-minute candle and the high of the 5-minute candle are the same, yeah, you have to have that set to true so that it says take more than one trade at that level. If you've got different lows on them, you will have different lows. You're never going to have the 5-minute and the 15-minute quite well. You will do sometimes, but if you've got the 5-minute range low there and the 15-minute range low there, but the 15 and the 5-minute range high are both the same candle, if those two are the same price and that is not set to true, it won't take the trades. Yeah, so you've got to make sure that that is set to true. Multiple trades at the same level. Into profit now in US dollar CAD. I'm just catching up on chat because I've been waffling. Blimey, I'm never going to get through this lot. My account is only 1,000. Can it be that? Depends how you're setting your... Look at the journal. Your journal will tell you if it can't open the trades. So if you go into journal, yeah, if you haven't got enough leverage to take the trades, it will tell you in there. I'm using the 5-minute hedge on GU, and it's been pretty good. Yeah, that's a good one as well. That uses the H1 RSI extension as well, so that is kind of an H1 RSI extension trade. Just re-entered my Dow long. So low, high, higher, low. Looking for that move up. We are in a symmetrical triangle formation at the moment. We're in contraction, so it might not go anywhere today. Waiting for tomorrow. When will you be releasing the new EA? When I've tested it. I've got to test it all. All this has got to be tested. So many stages to getting a product out, and testing is the big bit. I would never, basically, as you know, if you've been here for a while, I never released anything that I will not use myself. So if I can't get it working as I want it to, because I mean, I'll be able to get it working as I want it to. That's obvious. But if it doesn't perform as I want it to, then I won't put it out there, because there's no point in putting a load of crap on the market. There's enough crap on the market that doesn't work. Yeah, you know that. So I don't push it out there that doesn't work. So pending order considered more highly likely to execute compared to an EA trying to send a market order. An order gets executed by the market, by your broker, regardless of what type of order it is. There's no more chance of getting filled. A pending order, so a market order, depending on your broker, when you place a market order, if they can't get you filled at that level, or they don't want to fill you at that level because they've missed their profit, they will requote you. Yeah, so some EAs won't take requotes, which is understandable. If you have a pending order in the market and it gets to it and they slip you, you will still always get filled on that pending order. That pending order is guaranteed to execute at whatever level they deem fit. Yeah. So you will have more chance of a pending order getting filled than you will a market order if the market's moving fast. Unless the market moves fast through it. Oh, you git. Sorry, I was just watching the Dow. All the markets are coming down. Well, as you can see, it's here. Look. Put him back. They all are. Everything's taking a turn down. So yeah, I mean, it's down to your broker basically at the end of the day, whether you get filled or not. Can we add some comments on the order or in journal? Let's say range break, order taken. Yes, does all that. Does it all. Look in the journal. Don't worry, I'll look after you. Look. Candle 1 range is 146. It's under the minimum of 196. Candle 2 range is 183. That's also under the minimum. All the pre-market ranges are skipped today because the conditions are not right for trading. Let's take the pre-market range. The range is 360. The minimum is 277. The maximum is 554. Just trying to find... Trade closed. Today's profit is 840. Deleting pending orders as closed profit greater than target. Moving buy stop to break even to protect profit as closed profit is positive. Job done. All trades closed and profit target reached. Bring on tomorrow. There we go. So the journal tells you every stage of the logic, what it's doing, why it's doing it, tells you everything. I want that because I need to know. So I'm out of the S&P. So 1,000 banked on the S&P, 1,700 banked on DAX this morning. So 2.7 today. If you took the pre-market on the NASDAQ today, you're either double-ended stopped out or hedged. If you took the 5-minute ORB, not really going anywhere. These two are a bit tricky today. Weird, my CAD Swiss is only 69.94, a whole 5 points away from yours. Can broker data be that different? Yeah. Yeah, broker data can be very different. Hedging sounds like an exclusive. Oh, what? An exclusive? ORB has the same logging in journal. No, ORB doesn't. The only reason I'm putting logging in here is because there's a lot. ORB is very, very simple. ORB does have a little bit of logging, but the reason I've logged a lot in this particular one that I'm building is because there's an awful lot of logic going on to decide what goes on around the open. So I needed to see the EA going, I'm looking at this. I'm not quite sure about that, so I'm going to look at this instead. This looks okay. Is that right? Basically, so it's basically telling me what it's doing, so I can verify that it's doing what I want it to do. That's why there's so much logging in there. Coming down quite hard now. So we're just breaking out new lows on the S&P. Trying to. Not quite there on the NASDAQ. We're still a little bit higher on the Dow. Just see if this holds. If this low holds, which is your pre-market lows, you might get a bounce off of this, but looks pretty heavy. If I wanted to trade the ADR MRA on all pairs and adjust risk, would the setting the risk from 0.25 to 0.714 be about right? I wouldn't put it to 0.71, but 7%. 0.07. If you want to, or 0.1. Yeah, don't forget. So with the ADR, right? With all strategies, when you're using the opening range breakout, the market reverse alerts EA, obviously the reason we trade exposure is to make sure that we do not overexpose ourselves to one currency. Yeah. So if we've got all our eggs in one basket and that basket gets broke, we're in trouble. So you have to reduce your leverage if you're going to go, or your risk if you're going to go for multiple pairs in the same currency. So I've reduced from 0.25 to 0.1. Reason being is it's unlikely you would get 7 on at once. And if you did get 7 on at once, it's unlikely you would hold all 7 of those, because the other currencies are also moving. Yeah. So if you do get 7 on, they won't all go wrong at the same time, because some of them will go sideways, some of them will go up, and some of them will go really wrong. Yeah. Because don't forget, you've got other currencies pushing against these as well. So where I've got all this short on the US dollar, if you look at it, look at where I am with it. US dollar CAD, I've got 5 positions on at break even. Pound US dollar, same exposure, I've got 8 positions on at 2.3%. Euro US dollar, I've only got 1 position on at 0.07. Yeah. So although there's 3 shorts there, and Aussie dollar, US dollar, 4 positions on at 0.82. Although there's those 4 positions on, look at the difference in the drawdown. One of them's in profit. One of them is needing aggressive drawdown control. The other 2, not really bothered. Yeah. So if there was 7 positions on like that on the US dollar, you'd have a very, very different drawdown situation on the portfolio, because while the US dollar is having a rally and everything is coming down against the US dollar, or rather, whatever it is, whether it's going up or down or whatever, every single one of these other currencies, the pound, the CAD, the euro, the Aussie dollar, the Swissy, the yen, they're all going to be doing their own thing as well. So if you get the US dollar pushing hard 3 ADR at 3 ADR, over 3 days, just like rally, if the pound does the same thing, the pound US dollar is going to do nothing but go sideways. Whereas you might have something like the Australian dollar that's going 3 ADR down, that's going to move 6 ADR, and you're going to be in massive drawdown, needing drawdown control on that one instrument, whereas you'll have another one that goes sideways. So you don't have to drop it down too much. You just have to drop it down more. So assume that you're going to double your exposure, not have 2 positions on, you're going to have 4, maybe 5. In which case, then you can take it down to 0.1. That makes sense? If you go too low with your risk, you find you just won't get enough reward. Look at this month. I am struggling this month. Really struggling. Not because I've not got the right risk on or anything. The market's not moving still. We're in September and we're still not really moving massively. Yeah. Look at the RSI dash. Yeah, we're not going anywhere at the moment. We haven't had any extensions on 80-20 on the hourly yet this month. Nothing's got there. This thing's always got something lit up. Go back and look at replays from last year. This thing's lit up like a Christmas tree all the time. This is flat as a pancake and has been for 2 months. The market is just flat. They're worried about what's going on with interest rates at the moment. They don't know which way to take instruments. Therefore, they're not taking anything anywhere. We're going up and down and up and down. So if you reduce your risk too much, you're going to find that you're not going to make any money each month. And I'm on 0.1s, and I'm, what did I make last month? 7%. It's just not, can't quite crack it at the minute. It's just not moving enough. So just be careful with the amount of risk. Don't go too low. That sounds like a impossible thing to judge, but don't go too low and don't go too high. You just got to try it and see what you think. best thing I can say is go into the strategy tester, stick the EA in the strategy tester with a 0.01 risk, and just see how much money it makes. If it's making you enough money on the trades that are working, fine. If it's not, maybe up it a little bit. Use the strategy tester. It's absolutely fantastic for telling you what would have happened in the past. You're never going to replicate it exactly in the future, obviously, but it gives you a rough idea on how much money you'll be making. We just got a little bit of rejection going on the S&P. The NASDAQ has broken out of that low, but is getting rejected off of yesterday's low. Sorry, that's previous day's high. This high. Getting rejected off of previous day's high. So they're buying yesterday's high up, which they did there as well. Yeah. So, and the Dow, we are going absolutely nowhere on the Dow. But bulls coming back in across the board. So that low, again, being bought up. That's the New York low from yesterday. So there are no M5 market reversals on the indices. What do you mean? Oh, you mean I haven't got the indicator on there? No, that's not. The opening range breakout strategy is nothing to do with mean reversion. It's a breakout strategy. It's not mean reversion. Market reversal alerts indicator obviously is for mean reversion. Yes, that works fine on indices. Look, everything has a reversal in structure. I just don't use it on the indices because I'm not mean reverting. I'm breakout. Different strategy. Right, I've got nothing much else to add today. So I'm just going to watch this Dow. I've still got a long on the Dow. Not on this account, on that account. Which is basically exactly where we are now. So I'm just watching this to see if we can get a move to the upside on it. I've got a hedge down here set. Not really going anywhere at the moment, these indices. I think we are, same with FX at the moment. I think we're waiting for tomorrow. And then we'll have to see how much movement we get out of CPI tomorrow afternoon, because once that CPI figure comes out, we're setting up for the Aussie unemployment and the euro rate. So, and then as soon as those hit, we've got the PPI figures and the unemployment for the US, followed by Lagarde telling us where the euro is going to be going next. So from 1:30 tomorrow afternoon until 2 o'clock the following day, we've got masses of volatility coming into the market and potential upset. So it's very difficult to know which way they're going to want to take price. They don't know at the moment, which is why we're seeing a lot of sideways movement. So I think we need to wait really until tomorrow with a lot of this stuff. The Canadian dollar obviously has had a nice little rally. As you can see, everything else is in a holding pattern at the moment. So we're just waiting to see if that Canadian dollar movement can continue, because that's the only thing that's moving today. There's very little happened on the yen. So we've had that little bit of weakness come through on the yen after the push down. The Canadian dollar yen obviously has gone up further, but we've still got those gap fills in play at the moment. So we still haven't managed to get these done this week. So, you know, you can see what's happened basically with the yen. We've broken down and it's sitting there waiting for the CPI to come out. So there's very little we can do about any movement at the moment. We just got to wait for that figure to come out tomorrow. So we'll see what happens there. Nice double bottom there on the euro odd. But yeah, everything else is sideways. So I'll come back on tomorrow and we'll obviously have a look at it tomorrow afternoon. But as you can see, you know, this is why I'm not banking a lot at the moment. You know, it's just not going anywhere, is it? You can't make money when the market doesn't move. Obviously, 5-minute time frames, you can make money, which we are making absolute killing on the opening range breakout strategies at the moment. So they're doing very, very well. But that's the only thing that's moving, 5-minute time frames. Everything hourly and above, we're just stuck in holding patterns. Yeah, so literally ranges. The problem with this and the danger with this type of market is you identify this happening and then you go, excellent, I'll just sell every high and I'll buy every low. And as soon as you do that, that's when the trends start. So we are going to move at some point soon, but we need a catalyst. We need a really unexpected news event to come through, something that's going to shock the market into movement and give it some idea of where the hell we're going, because all aimless at the minute. Right, I'll leave it there today, unless anybody's got anything else they want to look at. I'll continue working on this EA, and I'll be able to get some more testing done, hopefully tomorrow. Possibly a bit more this afternoon. Back tomorrow morning, 7:50 for the Frankfurt session to trade the DAX again, and obviously for the US session for New York for tomorrow afternoon. Anything you need, let me know in Telegram. I will be in there. Yeah, we just wait and see what happens with this lot, basically. So, kind of lap of the gods at the minute, or lap of the banks, if you like. Pound US dollar says it all. Can't do anything with it. So, all right. So have a good day. The rest of your day. I'll be back tomorrow morning, 7:50 and 2:20 tomorrow afternoon. Come in Telegram if you need me. Otherwise, I will see you guys tomorrow. Have a good one.